The mahogany conference table gleamed under the soft lighting of Meridian Wealth Management's executive suite, where Mom had summoned the family for what she called a serious discussion about generational wealth planning. At 62, she'd recently inherited a substantial sum from her sister and wanted professional guidance on maximizing returns for the family's future. I sat quietly in the corner chair, the one clearly intended for auxiliary family members, while Mom, Dad, and my brother Kevin occupied the prime positions around the table. Our portfolio manager, James Whitfield, had spread charts and investment projections across the polished surface like a general planning a campaign. The Chen family has excellent potential for long-term growth, Whitfield said, adjusting his wire-rimmed glasses. With proper diversification and strategic positioning, we can build substantial generational wealth over the next decade. Mom beamed. This was exactly the kind of sophisticated financial planning that validated her vision of our family's trajectory toward prosperity. Now, Whitfield continued, I'd like to understand each family member's professional situation to better tailor our investment strategy. Kevin, you're in commercial real estate. That's right, Kevin replied, straightening his tie with obvious pride. Senior associate at Henderson Properties. Just closed a deal on that new office complex downtown. Kevin's deal had been a modest commercial lease that earned him a $5,000 commission, but he presented it with the gravity of someone who'd just negotiated a Fortune 500 merger. Excellent. Stable income with growth potential, Whitfield noted, making marks on his legal pad. And Mr. Chen, you're recently retired from manufacturing management? 38 years at Patterson Industries, Dad said with satisfaction. Good pension, solid 401k. We've always been conservative investors. Conservative investors. Their combined retirement funds totaled roughly $400,000. A respectable sum that represented decades of careful saving and modest investment returns. Perfect foundation, Whitfield agreed. And Sarah, he turned to me, your mother mentioned you work in technology? Before I could respond, Mom jumped in with the explanation she'd obviously prepared. Sarah does something with apps, she said with that patient tone reserved for discussing children's hobbies. Computer programming, I think. Nothing too complicated. More like tech support for small businesses. Tech support for small businesses. I managed not to wince visibly. She's always been good with computers, Dad added supportively. Fixes our phones when they break, helps us with the Wi-Fi. Fixes their phones. Kevin chuckled appreciatively. Sarah's our family IT department. Always has been. I watched Whitfield's pen hover over his legal pad as he tried to categorize my supposed career in tech support. His expression suggested he was calculating minimal income projections for entry-level technology work. And what kind of tech support do you provide? Whitfield asked politely. She freelances mostly, Mom answered before I could speak. Works from home, flexible schedule. You know how it is with computer work. Not really a traditional career path. Not a traditional career path. My flexible schedule involved running neural flow systems, an artificial intelligence company I'd built over 4 years that was now valued at $850 million. My freelance work included partnerships with Google, Microsoft, and Amazon that generated $60 million in annual revenue. The thing about Sarah, Kevin explained to Whitfield with brotherly condescension, is she's brilliant with technical stuff, but she's never been interested in business. She prefers working behind the scenes. Behind the scenes. Tomorrow morning, Neural Flow would begin trading on NASDAQ in an initial public offering that Fortune magazine had called one of the most anticipated AI debuts of the decade. That's actually quite common in technology, Whitfield said diplomatically. Many skilled technical workers prefer project-based income over traditional employment. Project-based income. My personal stake in Neuralflow was worth approximately $620 million as of yesterday's final IPO pricing. Exactly, Mom said, relieved that Whitfield understood Sarah's limitations. She's very talented, but it's not the kind of work that builds serious wealth. That's why we're focusing our investment strategy around Kevin's real estate career and my husband's pension. Serious wealth. I glanced at my phone where a text from my investment banker showed Neuralflow's pre-market trading indicators. Opening price locked at $67 per share. Your 9.3M shares officially make you worth $623 million at market open. Market open was in 14 hours. So for investment purposes, Whitfield continued, we'll plan around stable income streams from real estate and retirement benefits, with minimal contribution expectations from technical consulting work. That makes sense, Mom agreed. Sarah's work is more of a hobby that pays for itself. A hobby that pays for itself. Tomorrow that hobby would make me one of the youngest female billionaires in technology history. The investment meeting continued for another hour, with Whitfield presenting various portfolio strategies designed around what he perceived as the Chen family's modest but stable financial foundation. I listened quietly as they discussed 5-year growth projections, retirement planning, and wealth preservation techniques for people with traditional middle-class earning potential. Now, given your family's conservative risk profile, Whitfield said, spreading out a new set of charts, I'd recommend a balanced approach. 60% equities, 30% bonds, 10% alternative investments. What kind of alternative investments? Kevin asked, clearly trying to sound sophisticated. REITs, commodities, maybe some exposure to technology sectors that show consistent growth patterns. Technology sectors, like artificial intelligence, machine learning, and neural network applications, the exact sectors where Neuralflow had established dominant market positions. Are tech stocks safe? Mom asked suspiciously. We keep hearing about these startup companies that lose all their value overnight. Well-established technology companies can be excellent investments, Whitfield explained. Companies with proven revenue streams, strong management teams, and clear competitive advantages. But how do you tell the difference between real tech companies and those, what do they call them, unicorns? Dad asked. The key is looking for companies with actual business models, Whitfield replied. Revenue generation, not just user growth. Partnerships with established corporations. Leadership teams with track records. Leadership teams with track records. My track record included founding 2 previous companies, one acquired by Intel for $47 million, the other by IBM for $73 million. But since my family thought I fixed computers for a living, those achievements might as well have been invisible. Sarah probably knows about this stuff, Kevin said, glancing my way with amused indulgence. Don't you deal with tech companies in your consulting work? Occasionally, I said simply. See. Mom told Whitfield. Sarah could probably give us the inside scoop on whether these tech investments are legitimate or just hype. The inside scoop. Tomorrow's Wall Street Journal would feature Neuralflow on the front page of the business section, with my photo and a headline reading, AI pioneer Sarah Chen takes Neuralflow public in landmark IPO. Actually, Whitfield said, consulting his notes, there's a significant IPO launching tomorrow that might be worth discussing. Neuralflow Systems, an artificial intelligence company that's generated quite a bit of institutional interest. My pulse quickened, but I maintained my neutral expression. AI is very trendy right now, Mom said dismissively. But isn't it mostly hype? Like cryptocurrency? Not necessarily, Whitfield replied. Neuralflow has actual revenue streams, major corporate partnerships, and practical applications across multiple industries. Their founder has a remarkable track record. What kind of applications? Kevin asked. Supply chain optimization, predictive analytics, autonomous vehicle navigation systems. Real business solutions, not consumer apps. Real business solutions. Like the predictive analytics platform that had reduced Amazon's logistics costs by 12%. Like the navigation algorithms that powered Ford's autonomous vehicle testing program. Like the supply chain optimization tools that saved Walmart $47 million annually. How much are they raising in the IPO? Dad asked. $850 million. Initial share price is set at $67. $850 million. The number hung in the air like a challenge to every assumption my family had made about serious wealth. That's a lot of money, Mom said slowly. It's one of the larger tech IPOs this year, Whitfield agreed. The founder's stake alone will be worth over $600 million. $600 million. Kevin whistled low. Some people really know how to build wealth. Some people. Like the family member sitting 3 feet away from him, whose hobby had just been valued at nearly $1 billion. Should we invest? Mom asked. If it's as legitimate as you say? Whitfield glanced at his watch. The IPO closes to new investors in about 2 hours. After that, you'd have to buy shares on the open market at whatever price they reach. 2 hours. My family had exactly 2 hours to invest in my company before it went public and potentially doubled or tripled in value on the first day of trading. What do you think, Sarah? Dad asked. You understand tech companies better than we do. I looked around the table at my family, the people who'd spent the last hour planning investment strategies around Kevin's modest real estate commissions while dismissing my career as glorified tech support. I said carefully, tomorrow's going to be very educational about what constitutes serious wealth in the technology sector. The next morning I was in my Seattle office at 6 a.m., watching pre-market trading indicators while my legal team made final preparations for the Nasdaq opening bell. My phone had been buzzing since 5:30 with congratulatory messages from partners, investors, and industry contacts. At exactly 9:30 a.m. Eastern Time, Neural Flow Systems began trading under the ticker symbol NFLW. The stock opened at $67 and immediately jumped to $89. By 10 a.m., it had reached $96 per share. My 9.3 million shares were now worth over $890 million. At 10:47 a.m. CNBC ran their first segment about the IPO. Neural Flow Systems is having a remarkable debut on Nasdaq this morning, the anchor announced. The artificial intelligence company founded by 31-year-old Sarah Chen opened at $67 and is currently trading at $98 per share. The screen displayed NeuralFlow's corporate logo alongside a professional photo of me from the company's annual report. Chen, who built NeuralFlow from her home office over 4 years, now owns a stake worth nearly $900 million, making her one of the youngest self-made female billionaires in technology. One of the youngest self-made female billionaires in technology. Not bad for someone whose family thought she fixed Wi-Fi routers for a living. My phone rang at 11:23 a.m. Mom's number. Sarah. Her voice was strained, uncertain. Are you watching the news? Which news? CNBC. They're talking about Neural Flow Systems. They're saying the founder. They're saying it's you. It is me. Complete silence. Then, but the company they're talking about is worth billions of dollars. $850 million as of yesterday. About $1.2 billion as of this morning. But how? When did this happen? You said you did tech support. I said I worked in technology. You decided that meant tech support. I could hear rustling in the background, probably Dad grabbing the remote to find CNBC. Sarah, we didn't know, Mom said finally. We thought your business was we didn't realize it was this successful. Successful enough for Nasdaq, apparently. But yesterday at the investment meeting, Mr. Whitfield said we could invest in your company. You could have. The IPO closed at 6 p.m. yesterday. We didn't know it was your company. You didn't ask what company I was running. You assumed I was freelancing computer repairs. Background noise intensified. Kevin's voice. Is that really her? On CNBC. Yes, Kevin. Your tech support sister just became a billionaire. Sarah. Mom's voice took on that pleading quality she used when she'd made an obvious mistake. We could have invested. We could have been part of this. You were invited to be part of this. You chose to focus on Kevin's real estate commissions instead. Can we buy shares now? I glanced at my trading screen. Neural Flow had just hit $103 per share. Of course. At current market price. $103 per share, up from yesterday's IPO price of $67. That's a lot more expensive. That's what happens when you wait for external validation before recognizing value. My call waiting beeped. Bloomberg Television. I have to go. Financial news outlets want to discuss my hobby that pays for itself. I hung up and took the Bloomberg interview. The irony was perfect. The day after my family dismissed my career as amateur tech support, the business world was calling me a visionary. Neural Flow's stock closed its first day of trading at $107 per share, giving the company a market valuation of $1.4 billion and making my personal stake worth just over $1 billion. The media attention was overwhelming. Forbes wanted a cover story. Harvard Business School invited me to speak at their entrepreneurship conference. The White House requested a briefing on AI policy implications. My family's calls and messages continued for weeks. Mom sent articles about my success to relatives with handwritten notes. So proud of our Sarah. Kevin left voicemails about investment opportunities and family partnerships. Dad started telling neighbors about his brilliant daughter who built a billion-dollar company. I didn't respond to any of them. Instead, I established the Chen Foundation for Women in Technology, endowing it with $50 million to support female entrepreneurs in AI and machine learning. The press release mentioned my inspiration, supporting innovators whose families might not recognize their potential. 6 months after the IPO, I received an invitation to Mom's 63rd birthday party. Someone had added a handwritten note. Sarah, would love to celebrate your incredible success with the family. My incredible success. The same success they'd spent years dismissing as a hobby. I declined politely and sent an expensive gift with a note. Congratulations on your celebration. Unfortunately, my tech support schedule is very demanding. Neuralflow went on to partner with every major technology company in the world. My family went on to tell everyone they'd always known I was special. Some recognitions come too late to matter.